everyone, and welcome into CrushTheStreet.com. I am Kenneth Amaduri, and I'm joined today with Alex Dvorkin, first-time guest here at CrushTheStreet.com. We're going to be talking about the markets, but you know what? We're also going to be talking about some geopolitics today as well. A nuclear World War III, the prediction of this and the beginning of this, how it's evolving, how it's unfolding, and Alex has some pretty compelling thoughts on this. So without any further ado, let's get Alex Dvorkin on the line. He's with Spartans.com. That's his website where you can reach out to him. He produces lots of great content there and talks about the things that we're going to be talking about today, which is the economy and even some geopolitics. So Alex, thanks for coming on the show with me today.
Thank you very much, Ken, and thank you very much for the wonderful introduction. Very happy to be here.
Yeah, well, thanks for coming on. Let's get into the economy first, and I'm sure it relates to where we'll be going with World War III. But let's jump in. It would appear that interest rates are actually starting to impact things like the real estate market, and maybe it's already trickling into stocks and bonds, but you know, when do you feel, if at all, that this is going to be a material problem here in the U.S.?
Well, I mean, I think it's already becoming a material problem. I think, you know, the interest rates themselves, from my point of view, are not necessarily as important as the yield curve. And the yield curve has flattened over the last 2 years. And basically, at this point in time, it's a flat yield curve. And a lot of people would argue, well, it doesn't really matter because it hasn't inverted yet. And you know, as the past history teaches, when the yield curve inverts, then we have a recession. The stock market goes down significantly, and so on and so forth. So they would argue, listen, you know, it hasn't inverted yet. It's very close. But I view that issue from a different point of view. I think by being flat, it's already causing significant damage to the economy and the financial sector, and it's already trickling down through everything. And I do a lot of cyclical work, and that's my analysis of the stock market and interest rates as well. And that work basically says that we have a significant decline in our future, and that would suggest that maybe the yield curve will invert, maybe not, but just because it's already flat, it's already causing significant damage. So that's my take on it, if that makes any sense.
Yeah, absolutely. Well, and I'll throw this at you. It's interesting, in my opinion, with the stock market jitters we're seeing. And as we approach the midterms here, is it significant to you in any way that we are approaching these midterms with the market? Is it a shift in the Congress that maybe the market is worried about? You know, is it an effort to slow down the market, to hurt the current administration, so people are more likely to vote the opposite direction here in the midterms? Any thoughts on this?
Absolutely, yes, it could be. Just to give you an idea, my cyclical work basically says that the stock market top is already in. It really depends which index we look at, because there has been such great divergence. Some of my cyclical, I mean, it's a double top formation in the market. There are a lot of cycles that peak back in January, and we see it on a New York Stock Exchange, which is the biggest exchange by capitalization, or biggest index by capitalization. We haven't seen the new all-time high on that index by a wide margin. Okay, so if we look at it on the secondary top that we saw, for example, on the Dow or in the Nasdaq or the S&P, the New York Stock Exchange didn't even come close to that particular top. So the cycle's saying that we're going to go down regardless of what happens in the political realm. Of course, most of the financial media, or even President Trump, will say, well, listen, the Republican lost the Congress, the Senate, maybe both, and this is the reason the stock market is collapsing. So they will make that link or make that assumption, but in reality, the cycle's already peaked, and the stock market is looking to go significantly lower, from my perspective or my work.
So the Fed is in this continuous move here to raise interest rates. What do you see Fed policy doing going forward, and how does it pertain to what's going on worldwide? I mean, when the Fed tightens interest rates, this creates a problem for currency around the world. Usually the currency gets stronger, and that hurts emerging markets, especially, which borrow US dollars and have to pay interest rates on this money. And we're already seeing what's happening in Turkey and other countries around the world. So how do you see Fed policy moving forward here, and how does it pertain to what's going on around the world and here in the US?
Sure, that's a very good question, Ken. If you don't mind, I can talk about this from a fundamental perspective, but if you don't mind, I'll talk about it from my cyclical work perspective, because it actually shows me what the interest rates will do, what the Fed will do, what the stock market, how the stock market's going to react. So I'll just talk from that perspective. And
Okay.
basically, we called in our service, we called the bottom in a 10-year Treasury back in July. I think it was July 18th of 2016. It was spot on. It was the bottom, the yields bottom, and they've been surging higher ever since. So from that perspective, we can say, listen, the bottom is already in. The interest rates will never be this low again for maybe 100 years. The yields are starting to move up, and it will continue to move up. Now, at the same time, if we look at the stock market work, it predicts a significant decline. And when that happens, I anticipate the Feds to start cutting interest rates again, introducing another round of QE, and basically repeating what they did during the 2008, 2009 timeframe, and once again pumping a tremendous amount of capital into the system in order to stabilize the market um, and so to speak, save the economy. What is it going to do to? Obviously, it's going to collapse the the short end of the yield curve. It's difficult to say what's going to happen to the 10-year, 20-year, 30-year Treasury. Most likely, it's going to be at elevated levels, maybe around 2-3%, and so that's my kind of take on it. My work shows also dollar is going to continue to go up in value. Other currencies I don't really follow, but the dollar should be moving up over the next couple of years, and at least hit the top once again. I think it was 110. So we'll probably see that level again.
So, Alex, does it matter if we do see a major market correction here? And does it happen here in the US, or does it happen similarly to what we saw in 2008, where the whole world crashes and the whole world reacts in unison with monetary interventions, especially through central banks around the world?
Yeah. Well, I mean, I think it's already happening. I think this time around, it's everybody's leading the way, especially the emerging economies. China is crashing, many other markets as well. So I think we're going to follow this time around. Um, the cyclical composition of the U.S. market is a little bit different. The topping process takes a little bit longer usually. So that's what we're seeing in the stock market, according to my work. And it's not going to be, well, actually, I have two possibilities when it comes to my work. I have a very deep correction that takes us back to 2009 levels. But most likely scenario is we're going to push slightly below 2016 bottom. And that's where the bottom is going to be before we rip higher once again. So which scenario is going to fire off really depends on how fast the stock market goes down over the next, let's say, 24 months. And we'll be able to ascertain which scenario is playing out at that point in time.
All right, Alex, let's talk about World War III potentially between Russia and China versus NATO.
Right.
First of all, let's talk about what Russia and China's relationship are and why them versus NATO.
Um, well, I think all we have to do is turn on the TV today, and that's going to answer the question. But Can I give you a little bit of a background why I think it's going to happen? Because it's very important in order to understand why it's kind of coming down the pipeline.
Let's do it. Yeah, sounds good.
Okay. So once again, the work is based on the stock market cycles. Okay, so that's where I spent a tremendous amount of time, probably 15 years of research over the last 20 years, and um, I don't exactly remember how I ended up identifying this war cycle, but I did. And basically, what it says is that every single war in America is in America, and that's very important. Other countries have different cycles. Every single war in America is exactly 84 years apart. Every single significant war in America. So there's a Revolutionary War that started in 1776. Okay, then exactly 84 years later, there was a Civil War, 1860. Exactly 84 years later, there was World War II. Actually brought us to 1944. Not exactly at the start of the war, but in that particular spectrum. And if we take that cycle once again, it will take us to 2028, 2029, 30. That's exactly when we expect this war to happen. And if people want to learn much more about it, that's exactly what I talk about on my website that you mentioned earlier in the interview. So what's interesting is that this war lines up with the next Great Depression. Okay, so we are following the stock market composition is exactly the same as it was in the early 1920s and then subsequently 30s. Okay, so what I found out is the stock market will completely collapse within a matter of weeks. So that's what pushed me into the war cycle in order to identify it and say what's going to happen. And the same cycle basically says that the weapons that were used at in the previous war, or new weapons, I should say, are used extensively in the subsequent war 84 years later. So we know that the US used nuclear weapons in 1945, Hiroshima and Nagasaki. If we take 84-year cycle from that period of time, that brings us into the same time window that the stock market completely collapses, which indicates to me that the war is going to be nuclear. That's point number one. Why is it going to be NATO versus China and Russia? Well, China and Russia are coming very close together because of the U.S. actions, and NATO is pushing on the Russian border. It has been doing so for the last 10 years. There's a lot of friction there. But in reality, really, China and Russia are coming very close together, both economically and militarily. They just had the biggest war game ever. I believe it was about 2 months ago or maybe 6 weeks ago. So they understand that for whatever reason, we can, it's a big question. For whatever reason, the U.S. and NATO are pushing on them, and that will trigger the war. That's kind of the answer.
So is it U.S. dollar hegemony that you believe is also one of those underlying factors? So I thought it was interesting that you talked about the market cycles and that we have this war, every 88 years, you said?
84 years.
84 years. Yeah, that's really interesting. But in it all by itself, I wouldn't necessarily say it's significant between the time and necessarily the war. But you bring up this stock market crash and this correction that is going to take place. What is why would that push us into a war per se? The depression, this crash. What's significant about that? Is it the U.S. dollar?
Not so much the U.S. dollar as let me answer it once again based on my work. So what's going to happen is that we'll have this correction. The Fed will lower interest rates back to zero. They're going to pump tremendous amount into the system once again. The stock market will zoom up. We can argue that we're probably going to have much higher inflation readings at this point in time. But basically, they're going to accumulate more and more debt. As you know, the debt went up significantly from the 2008 period. At that point in time, it was massive. Now it's just astronomical. Now imagine if it doubles again. and basically that debt cannot be repaid, as you know. So they're either going to try to do it through inflation or war. That has been the mechanism over the last couple centuries. I mean, it's the cycle that has repeated itself all the time. We can argue about that World War II was actually uh, the continuation of World War One and the economic reasons behind it. And I think it's going to be the case here. It's not so much the dollar; it's just a tremendous amount of debt that the U.S. will accumulate, and maybe China will want to be repaid. But that will cause friction. I mean, we're already seeing this friction just look at what Trump is doing. It's the current trade war is absolute nonsense, but he's making Americans believe that the Chinese are ripping them off, and we can argue about that. But the reality is it's not necessarily a correct reading. So I think the preparation for the war in terms of the economic aspect of it is already starting. Okay, so they vilified the Russians, they vilified the Chinese in the American media. The Russians, of course, meddle in the election, and the Chinese are stealing American money and technology, etc. So it's just the beginning phase of vilifying the opposing side, and history teaches us that it takes between 7 to 10 years to completely vilify somebody in the eyes of the population in such a fashion that the population is ready for war. So I think that's what's happening already in today's environment.
And to remind everybody, what is the timeline of this war that your analysis is concluding to?
I give the exact year on my website premium service, but let's say that the nuclear exchange will take place between 2027 and 2031. So I'll give you a 4-year window. If people want to find out, I'm sorry, I would be doing the disservice to my clients to
Understood.
If people want that information, they can just go and look on my website. It's not very expensive, and the information is there.
Absolutely. Well, Alex, this was a really entertaining and I think informative conversation. I'm sure people will agree and disagree, but regardless, it was something that caused us to really think about what's going on geopolitically, think about what's going on, here in our country and around the world as it comes to finance, and how wars have essentially always been about finance or land or power, and we're still dealing with that today. And as it pertains to cycles and the different variables that are changing but yet the same. History doesn't repeat, but they say it rhymes. So again, thanks for coming on the show. If you would leave us with some closing thoughts here as to your work and what people can find if they visit your work, please let us know where they can go and what they'll find.
Yeah, absolutely. You're absolutely right, Ken. So basically, just a very quick summary, people have to look at it this way. So they've been pushing the system on and on and on with the leverage and debt and speculation for 20 or 30 years, you can argue. Many people expect a Great Depression to happen now. They say, 2008 was just a preview, and they right in a certain degree, but they're about 10 years away from the actual Great Depression and the war that will happen. And what people have to understand is that all the policies that's happening today and all the pushing of this incredible financial experiment will have repercussions, and those repercussions are going to be just absolutely horrifying not for the Americans only, but for the humanity overall. So if I was listening to this interview, I would take this information seriously. You can follow my work I have 2 websites. Investwithalex.com. It's my financial newsletter and more concentrated on the stock market. And my second website is Spartans.com. That's where I talk about this war forecast. I also talk about different financial issues, and people are free to follow me and see whether or not what I'm talking about is actually comes to fruition. And if it does, then they better pay much closer attention to my war forecast, because that's going to be the end of it all.
All right, Alex. Alex Dvorkin, everyone. Thanks for coming on the show with me today, sir. And obviously, thanks to everyone for tuning in and listening and following Crush the Street.
Thank you very much, Ken. It was a pleasure to talk to you. And once again, thank you for having me. And anytime you want to talk to me again and scare the bejesus out of your subscribers or listeners, then I'm the guy to call.
Oh, no. We're not scared. We're always in prep mode. So being prudent and being ready. That's the name of the game, right?
Great. Yeah, that's it.